One of our areas of interest is the structural shift from physical cash to digital payments. Kieran, can you tell us about this area of interest?
So digital payments has actually been one of our areas of interest that we've been invested in for a long period of time. So really, quite simply, it's about that shift from physical to digital cash. Many of our investors will know that we love these things called S-curves or penetration curves. And digital payments is one of the classic penetration curves or S-curves. So you've got physical cash transitioning over to card or debit or credit transactions. Now, as Australians in the developed world, we know and understand that dynamic in our everyday lives. But if you look at digital payments and that S-curve, it's actually got a lot of room to play out on a global basis.
And what is driving that S-curve?
So there's really a couple of drivers of this penetration curve. So firstly, we've had the proliferation of tap and go payments, and we've all been familiar with this through the COVID period. And so tap and go payments are really inflected. Consumers, they used to not tap and go for small amounts or small payment or small transactions. Really, they didn't tap and go for things like a small coffee or pay for parking in a parking meter. Now, all of those small transactions are being brought into the digital world. So that tap and go payment has really caused this inflection in digital payments. The second driver, I think, is a big one, which is the e-commerce transition. So as retail sales move from offline to online, you obviously need to pay for those transactions online. And so digital payments in the e-commerce world are actually higher value transactions because the card is ultimately not present. So whoever's processing that transaction needs to take on more risk to be able to settle it. The last driver is really in emerging markets. So in emerging markets, many of the economies around the world are still cash societies. And as they transition from physical to digital cash, that provides another uplift to that digital payments S-curve. So there's lots and lots of different drivers. I think maybe the last driver really is the business to business opportunity. So we see digital payments in our consumer lifestyles, but in the business world, there's hundreds of trillions of dollars of business to business transactions, of which only a small fraction is digital or done using card. And so that has a lot of room to run, meaning that the companies that can enable these sorts of payments to happen, the digital payment companies, are set to grow their earnings in a really meaningful way going forward.
So who are these major players?
Yeah, so Visa and MasterCard really are at the forefront of this opportunity today, and they're really important parts of the puzzle. So they're effectively the networks. So what they do is they connect with your card issuer or your bank, and they connect with the processor of the transaction. And what they do is they take a very small fee for processing that transaction. And so they're like the rails, so to speak, of every digital payment transaction around the world. They've been incredible businesses because they've developed this moat around their competitive positioning. They typically grow their revenues at about double digits, and they grow their earnings at about mid-teens. And they've done so for a long period of time. And in our estimates, we think, in our view, that they can continue growing that earnings profile in a mid-teens way for the next medium to long term. And so how they make money, as I said, is actually taking a clip of that transaction. So when a payment shifts from physical into the digital world, Visa and MasterCard take a small clip and so have a very high incremental margin, meaning that every new dollar that comes into the digital space is basically being processed by Visa, MasterCard at almost 100% profitability. So they're really meaningful players and really crucial to the digital payment ecosystem playing out. Other players in the space are companies like PayPal in the e-commerce world, companies like Square or Block, which are building a digital wallet, so to speak, where consumers can pay for things online, they can transact between each other, they can trade shares, they can buy crypto, they can get paid their salary. Other players are those merchant processors or merchant acquirers, and they're businesses like Adyen, for example, in Europe, that processes the transactions behind the businesses that we interact with every day.
And what does this shift to digital payments mean for traditional banks?
Great question. So we think the shift to digital payments means that the banks are ultimately shared donors in this case. So if you think about a consumer in America, for example, when you start out, you might open a bank account as a young person. It's potentially possible now to bypass opening that bank account and almost live your entire life, your entire financial life, on a digital payment or through a digital payment company, outside of obviously getting a mortgage. So take PayPal as an example. Instead of opening a bank account as a young person, you might open a PayPal account where you can easily buy things online, goods and services online. You can easily transfer money to people. You can easily transfer money overseas. You can even get paid your wage or your salary. And so over time, we think that banks will lose more and more share here as digital payments evolve.
And we can't talk about digital payments without talking about cryptocurrency or blockchain. What is the investment team's thoughts on this?
So cryptocurrency is a really interesting area. So when we think about these S-curves, cryptocurrency we think has a role to play in the digital payment landscape in the future. But when we think about S-curves, cryptocurrency is right at the start of that S-curve opportunity. So it's going to be volatile and it's going to take time to play out. What we want to see ultimately is more everyday applications being accepted through crypto payments. So we want to see that online transaction being paid for by crypto. We want to see that grocery transaction being paid for by crypto. And over time, what we think needs to happen is that many of the different coins that are out there ultimately need to consolidate. And once they do consolidate, you'll get that confidence in those everyday transactions being able to be facilitated by crypto. So we think there's a role to play. We think over time it'll take share from traditional fiat currencies, like Australian dollars or US dollars, but it is right at the start. We're very early. It's going to be volatile and it's difficult to value right now.
Thanks, Kieran. Great insights.
Thanks a lot.